The Toronto real estate market is often a crystal ball as to what we can expect to see in Vancouver in the upcoming months. So today we have a very special guest joining us who is on the front lines in Toronto. Tom Storey is a predominant figure in the real estate market there and joins us to take a look behind the curtain, share how bad it might actually be, and give us a real-time, boots on the ground look into what is really happening in Toronto real estate. Tom, thanks so much for joining us today.
Thanks for having me, guys. Dan, nice to chat with you again. And Ryan, nice to meet you. Thanks for having me.
Absolutely.
Yeah, our pleasure. Our pleasure. We're excited to get into this one. So I guess, Tom, let's frame up today's episode by having you introduce yourself to our viewers, maybe talk a bit about your team and the areas that you specialize in.
Yeah, for sure. So I've been selling real estate in Toronto, actually just starting my 12th year, which is crazy. I just realized that last week. We're heading into year 12 here, which is crazy to think of. And so I've got a team of 5 active real estate agents, some support staff as well. We service the entire Toronto market, but when I say the Toronto market, I mean like the 416 area code. So if you looked up like real Toronto on a map, that's where we do 95% of our transactions. But we do have our biggest market share, at least in listings, in the downtown condo market, which has been interesting the last few years because it has shifted so much. And I'm sure we'll really get into that today. Also pretty active here on YouTube. We have a podcast that Dan, you were on a few weeks ago. Ryan, I'd love to have you on in the future. And so we have you're the Saturday show, we're the Sunday show for Canadian real estate. And then I got my regular channel as well, where we just try to tell people similar to what you're doing here. Like, here's what you're hearing, what's going on in the market. Here's what we're actually seeing. And I think for us 3, we have this unique perspective where, and I've said this many times, and my words are very clear on it. Like, most people that are actively commenting on the market are not involved in it. And there's nothing wrong with that, but I think there is a different perspective that we can have where the numbers are the numbers, but we're also having conversations with buyers and sellers every single day that can kind of project maybe where things are going versus just focusing on the numbers of the past.
Yeah, it feels like to me in many ways, Tom, a lot of people, when they look at the marketplace, they're looking at lagging indicators as opposed to forward-looking indicators. And, one of the things I think that we might have over somebody who's looking at that is the overall sentiment that people find in the marketplace. And that is indicative of future behavior, which largely is what economists are trying to predict. And so, our boots on the ground perspective, I think it definitely matters. And it's going to be different than when you're simply looking at the stats. And I think that's maybe an interesting segue into kind of the first maybe topic here that we can get into, which, in the world of the Toronto condo market here, it feels like there's, I don't want to say the word crisis, but it feels like it. It's coming on to that. And I just would love to know if you can elaborate on maybe what's happening. Is it as bad as it sounds? Is it as bad as we're reading, as the stats appear? Are people not closing? Developers we read, last year we were seeing almost every other week, it felt like a Toronto developer was going down. And it's not unique to Toronto. It's happened here too. So maybe give us a little bit of rundown on that particular space in the market and what you're actually seeing.
Yeah. So for the Toronto condo market, we almost have to put it into 2 different segments. You've got the active inventory of our current market, what is for sale on MLS. So I'll start there, and then I promise I'll get to the doom and gloom of the pre-construction stuff. But your active inventory, you can buy a condo right now in the city of Toronto for the same price people were paying for them in 2019. So that's interesting, right? It's like, well, what happened? Why haven't prices gone up? And the fact is they have gone up, but they've gone up and down a few times in the last 5 years, where we're back to kind of like zero growth. And if you look at what happened, it's very clear in terms of, interest rates and everything else that we went through, and that people that are investors are mostly impacted by these rates. And if you're going to offload a unit, it's going to be an investment property before your primary residence. So there's all the factors that we know. But the reality right now in the downtown core of the city of Toronto for the resale market, we have 7 to 8 months of inventory. So, for someone that's maybe not tracking the market like us 3, that means 1 out of 8 condos that are listed every month are going to sell. That is a very low absorption. And then you got to break it down and ask yourself, well, what's actually selling and what's not selling and what's for sale? Is it bigger units that are selling? Is it smaller units? And it's really clear to me, 1 bedrooms and 1+10s are a tough sell right now. And unless you are a loft property or you have some type of wow factor, like an amazing view, or it could even be something where you're just a smaller unit, but you're the one that has a parking spot and all your competition doesn't, that will allow you to sell in this market. That puts you in that, just over 10% of properties that are going to find a buyer every single month. But then it's totally separate. Like, when we talk about the overall market, there's different, types of properties you can buy or sell, but just focusing on condos, 2-bedroom condos, every 2-bed condo our team has listed for sale this year, and we've listed quite a few, we've already sold. But then the 1-beds we have, we're like begging for showings. So it's weird. Like, we just listed a 2-bed condo in the east end of Toronto in a building where nothing else was for sale. And it was roughly $1,000 a square foot, like pricing it where we needed it to be. And we've had 15 showings on it. So it's this weird dynamic where it's like, I can tell you the overall condo market's not great. We're not going to see price growth at any point in the next 12 months for average sale price in the Toronto condo market. And maybe that's fair to say for Vancouver as well. You guys can tell me if it's any different. But it really depends on what you're selling. How big is it? We found these older condos that are 1,500 square feet in buildings built before the year 2000. We used to joke in our industry, we call them career listings, because it was pretty impressive if you could sell one, because it might take you 2 years, and the average realtor only lasts like 2.5 years. So, but now they're selling quick. Like, we had 2 examples of these end of last year where between 2 properties, we got 8 offers because the buyer buying it is a downsizer. So that's kind of like the scope on the general market. It's a buyer's market. The stuff that's selling is not selling for crazy high prices. People are being much more realistic. And I'm sure you guys are seeing the same thing, but I've had so many people reach out to me in 2025 where I'm realtor number 2 or sometimes realtor number 3 coming in saying, hey, last time you tried to sell, we were in the transition zone where things were changing so quickly. I understand why you didn't sell. You didn't adapt quick enough. This is what you need to do today. So that's kind of where we're at on resale. And I'm happy to get into the pre-con side.
Yeah, definitely. I'm always surprised how much Vancouver and Toronto markets emulate each other. And they have for decades. When you talk about the downtown condo price being the same as about 2019, Vancouver downtown, super similar. You can pull the data back for about 25 years. And right now, 2017 was our peak where it's basically flatlined since. Yes, like you said, a bit of ups and downs, and they're higher than they were off of the lows of the pandemic. But ultimately, there's been no price growth in 8 years in that segment. And also, like, the sort of hyper localness of the markets is very true, in the sense that, yeah, sure, you can't just swipe with one brush the whole condo market, like you mentioned, because a 1-bed versus a 2-bed are acting very differently. And the same thing is here, right? A good unit will move. But I'm very curious, outside of the condo market, like, how's the rest of the real estate market? Like, are townhomes moving, are detached moving, or is it all kind of sluggish? What's the feel?
So we have different terminology for what we call like semi-detached and townhomes. And so I'll try to explain it in Toronto terms so that we're all on the same page. But I've never seen in one market happening at the same time, the difference between property types that's happening right now. I've never seen such a disparity on what's going on one side of the market versus the other side of the market. So what we would call like a semi-detached home, which is a freehold property where it's 2 houses that share one wall in the middle. I think you guys would call them something, a duplex maybe.
Yep.
So that is the type of property that falls into the price point in Toronto between, $1 million and 1.5 million, depending on the specific pocket that you look at. And that is the entry level to freehold home ownership that everybody wants. So right now in the city of Toronto, if you take every semi-detached home that's sold in 2025, on average, they've sold over the asking price. It's just wild. All with, and lots of them are still getting away with doing offer dates and listing lower and holding a date because it's working, because the inventory is so low. So if we were to like simplify this, semi-detached homes are very strong right now. It is a hot seller's market. Detached homes, where the price point comes up, obviously, it's a balanced out market that is still relatively good, but nowhere near what it was previously. And then we have kind of townhouses in 2 different categories. We have freehold townhouses, where there's no strata fees at all, but there's not that many of them. So they're kind of like over here because only a few sell every single month. And then you have two different type of strata townhouses. You got the townhouse community, which is like there's no condo building anywhere. It's just a bunch of townhomes that are, you know, low rise, lots of stairs in these condos, in these townhomes. And then you've got your condo townhouse that sits on floor one of a 40-story condo building. So the condo townhouse communities are doing fairly well because that's a nice in-between move up from the one-bed condo, but you can't afford a freehold property yet. But the condo townhouse at the bottom of a building is doing fairly similar to what the overall condo market is doing. So it's really weird because I've never seen such a disparity between different aspects of the market all happening in the same interest rate environment.
Tom, would you maybe, is it suffice to say that investor speculation is probably why a lot of these one-bedroom condos are not selling? And then when you look further down the marketplace and you talk about, you know, that 1 million to 1.5 million, I mean, a couple things come up there. First, affordability; two, utility; and then three, you've also now got federal programs that allow you to be insured up to 1.5 million as well. That's a whole nother can of worms that we can open. But ultimately, it's sounding like to me that the market is largely being moved by end users, people who need the property to live in, you know, for their life, as opposed to, say, the investor segment, which in Vancouver anyways, it's largely disappeared. And, you know, I'm assuming, and maybe, you know, correct me if I'm wrong, but is that the case in Toronto as well? Have, you know, investors completely kind of checked out for the time being?
Pretty much. Like every decision that's being made right now is an end user making that decision, which is probably like healthy for the resale market right now. Probably will cause an issue 5 years from now because nothing is being built, which we can go more into depth on that right now. And it's, you know, when we talk about the one bedroom condos, because they're pretty popular online right now. A lot of hate is being thrown at the sub 500 square foot condo, which most of the people hating on them were never the person that was going to purchase them anyways. But if you look at, yes, they're getting attention because they're not selling and they're going down in value quicker because who's going to buy that other than an investor? Like, yeah, you'll rent it, but if you're a first time home buyer, you'd rather save another 15, 20 grand to get a slightly bigger one with a real bedroom door, right? So if you look at that part of the market, in the new stuff coming, the 30,000 new condos we have being delivered to the Greater Toronto area, it's only like 10%. Like it doesn't actually make up as much of the market as people think. It just gets all the attention because they're having problems selling right now. So I think that will continue though. Like it's not magically going to be that those units have a lot of demand again, unless interest rates go back to 2%, which is not happening. Hopefully tariffs, I don't know, but hopefully that doesn't happen, because if it does happen, it's not for a good reason. So yeah, it is all end user driven right now. People are making decisions for their lifestyle. And we've actually seen a lot of people that are renting, and I would call maybe lifelong renter is the wrong word, but they've been renting for 10 plus years. We've had quite a few of these calls, and they're saying, hey, I've been in this situation. Buying was so out of reach previously, but I'm looking at the condo market now and I think I can qualify. And I want to, it's more of like a pride thing than anything. They're not buying because they think prices are going to double in the next few years. They're like, I would rather own my property at this point in my life. So we're getting first-time home buyers that are 40 years old, that aren't 25, and they're not buying for speculation or growth. They're buying because I want to know what the next 10 years of my life looks like. So the reason behind the demand is much different than what I've seen at other points in my career.
We'd love to have you expand on the 30,000 odd units that are completing. Because, we often get the headlines over here too of like, oh, these 3 people had to walk away from their deposits because they're underwater, etc. And no, you don't ever really hear the stories of the 99% of the people who close no problem.
Right.
So I want to kind of get your boots on the ground sort of feedback on like, how bad is it today as far as people who aren't completing? And what do you think is going to happen moving forward with this 30,000 odd, completions in the next 12 months?
I think it is bad, to be honest with you. I think there's a lot of things happening behind the scenes that nobody has access to those conversations. Like the only person that would be able to tell us for sure is the developers. And I'm not sure if they'd openly have that conversation right now. Now, the blanket appraisals is a big talking point, which I'm like, I don't know how I feel about it. I don't feel great about it because it's denying the inevitable of like, yes, the other side of it, if none of these things are appraising and people can't close, is not good. But we're just now the money lending system is propping things up into the future by doing these blanket appraisals, which again, everyone's got a different opinion on this. I'm not overly thrilled about the they've taken all the onus off the developers and put it onto the mom and pop investors by doing these blanket appraisals. So I think there is a lot of things going on behind the scenes. We had a lawyer at one of our recent team meetings, and he was like, what we've found is working right now. If you have a client that purchased in one of these buildings and it's coming up to closing and they can't close, like they cannot make this work, even with the blanket appraisal, they can't make it work. He's like, me as a lawyer, we're calling and getting a team of 20 law clerks that are not getting us any questions. And they'll like extend the closing, but not officially tell you they're going to extend it because they don't want that in writing. There's all these things happening. He's like, the only thing that we've seen so far that's worked is the real estate agent that initially sold them that property. If they go direct to the developer and say, hey, my person cannot close because they bought this property for $1 million in your building, what do you have, or what is someone else trying to give back to you at $800,000? We will take that one if you take that one back. So I have heard, again, this is not like in the news or anything, but some success stories, but it's not because your lawyer's calling. It's because the realtor that represented you is actually going into their office and being like, this is our only option. Can we make this work?
Well, and you also, for the developer, they want you to close as well. I mean,
oh yeah,
we've had instances here, where 25% of the building doesn't close and walks from deposits. And, a couple things happen there. Well, more than a couple, but, the main fallout from that is either the developer ends up footing the bill and they go broke, or trades that built the property don't get paid. And, that is, and then, that stifles further production for supply later. Right. And so, it's interesting. I think, on our side here, if you're trying to assign a presale right now, developers are very tight with this. They will not let you advertise it anywhere because they're worried about this very scenario, right? They're trying to keep people locked in their place. They don't want you moving it. They don't want it assigned, even for no money, like, no lift. People are trying, and we're just not seeing it. It's very interesting.
Could you guys imagine, like I used to complain 5 years ago, it was like, why don't the developers just let us put these assignments on MLS? It would be so much easier. And now it's like, thank God they never allowed it, because imagine like all this stuff is happening behind the scenes. And so if you're looking at what part of the market is there going to be some issues, like it's very clear. It's very clear. It's people that bought new construction at a higher price and it's closing this year at a lower price. And they have to decide, can I find a way to close on this? Am I walking away from my deposit where likely they're going to get sued after that? Like what are their options? So yeah, there's certainly things happening, but they're happening behind the scenes. It's not happening on MLS. It's not official, right?
Tom, why is it like there are plenty of banks that offer pre-sale home buyers a pre-approval 3-4 years in advance, an appraisal that stays for the life of the building, and an income guarantee? Meaning all these people that are closing today, they could have bought 3 years ago for, let's say, $1 million. And that the value at closing would have stayed at $1 million, even if the market was, let's say, $800K. They could have lost their job, but the bank's already pre-approved them, so they're good. And the third one was, of course, that, the rate was locked too. So even if the rates went up, they still get the old rate. And if it went down, they benefit from it going down. Like this is just an absolute no-brainer safety switch that you could pull. And yet I hear almost nobody else talking about it. And I see so few people doing it. So, well, I got a couple ideas why, but I'd love to hear yours too.
RBC used to offer this. My guy at RBC did this for a bunch of our clients, like back in the day, and they loved it. Now, it didn't end up mattering back in the day because the rates were kind of the same. But could you imagine if you're in a position that you can get a sub 3 rate or 3.5 rate in today's market? I think the actual reason why is, like, let's be honest with each other. The pre-construction market got out of hand. Prices went up so rapidly in terms of what they were valued at before versus resale. People were buying on fear. There was lineups outside of presentation centers. There'd be 100 units and 400 allocations. Yeah. And people are just like, I'm buying it because if I don't I'll never have a chance again. Like it really, we were buying on this mentality that wasn't logical. And I think a lot of, at the time, pretty savvy people in this side of the market just figured like, this has always worked for me. I'm just going to keep doing what I'm doing. In fact, I might get more than I used to because it's worked so well before. And like, obviously they didn't know how things were going to play out. And you have to give the developers credit. I know you guys work with developers directly. They're really good at marketing.
Mm-hmm.
They're really good. They really make it very clear as to why someone, like, it's sexy marketing. And I think it worked on a lot of people that maybe didn't take a sec, not only to go back and figure out, if I'm getting my pre-approval, does this option exist to me? Did the mortgage broker even tell them it existed? They were just so excited to have an opportunity to buy this thing that nobody else could get, that they didn't even think about it. So I think they, sum up everything. I don't think that they were educated enough when making that decision. And now it's going to come back and bite them 5 years later.
Well, also, in many ways, when you had rates that got down to, a quarter point, for example, and you're in a frenzy where, and it felt like a frenzy at the time, the mentality behind it was not sound, and people were not looking historically and then projecting into the future and looking at metrics that might support prices and things like that. It was more of a gambling mentality, this sort of like, if I don't get it, I'm never going to get it. And, real estate moves slowly, especially when you try and dispose of it. And, this has come around and caught people. And it's unfortunate, really, because, in many ways, I think there are people out there who were trying to legitimately get into the marketplace as well and got pinched in this too. And I think it's as much a monetary policy discussion as it is a policy about development as well. Should we really be having, 350 to 450 square foot condos in the first place? Right. I don't know what kind of purpose they serve ultimately, other than speculation. Right. So
the numbers made sense for rental. That was the purpose they served. Right.
Right. And look at where we find ourselves in the rental market today. Very different place.
Because that 30,000 units being completed, now not all 30,000 be completed and go on MLS, right? But of that 30,000, is it fair to say at least 70% of the purchasers were investors? Probably, right? Maybe more.
Yeah.
So
and
most of that
there with one or two properties or three properties, even, right?
Yeah.
Which is another big problem.
Yeah. So let's say they can close on them, and the 99% of people that do close on it, okay, they close, and yes, they're going to take a hit on the cash flow. It's not going to be pretty for the next little bit based on where rentals are at. Mm-hmm. The new inventory that's coming, a certain percentage will go to the sale market, but I don't actually think it will impact some of the other good condos because it will still be so much higher priced than the current inventory that it's like a different zone of the market. We're about to flood the rental market in the city of Toronto. Mm-hmm. Like rental prices will be impacted because we have a ton of new rentals that are coming. And as you guys know, when a building launches, at least in Toronto, when we get interim occupancy, they give you the key and they're like, good luck. And then there's 100 rentals that hit the market at the same time. And, your average landlord investor is maybe not doing rent incentives like 1 month's free or whatever, like these big corporations would. They're just decreasing their price. There's 20 other units that are the identical floor plan to theirs, and they have to be the lowest price option to rent quick so they don't miss that first month of mortgage payment. So I think actually rental prices are going to dip down. Now, saying all that, they went up so rapidly the last 5 years that this is probably something we needed. But that's a headline you'll see. Rental prices will keep pushing downwards, I think, in Toronto.
Fair enough. Let's look at here. So January, there was a record low amount of new projects that were brought to market. So having a look at future inventory based on the amount that's coming, I mean, I kind of know maybe the answer to your question here, but does it look like developers are going to continue to pause into the future? I don't, out here in Vancouver, we've seen a number of projects that have just been shelved as a result of very low appetite. And based on, in my opinion, with also factoring in geopolitics and taking a look at the election cycle, I think that there's a lot of reasons why you're going to see hands off in 2025, but I'd love to hear from you and your perspective out there.
I think the developers have no choice but to be patient. We actually interviewed this morning Sean Hildebrand on our podcast, and he's the president of Urbanation. Now they mostly focus on the GTA, but phenomenal insight. Like, they're the ones talking to developers, doing surveys, giving them third party, breakdown on the feasibility of these projects. And he was basically saying all the applications coming in right now are only purpose-built rentals. They're not launching. It's not happening. And so, time will tell to when does it make sense for a developer to launch again. But then the question is, will the buyers even show up? Like, if right now the whole market is end user demand, do the developers have to go back to the drawing board and look at their projects and say, well, we had, 25 junior 1-bed units. We got to scrap those because no one's buying those right now, and put those into a better realistic 1+10 that's 600 square feet. Do we need more of that? Or in the resale market, we know 2-beds are moving all right. 3-bed condos are moving all right. It's the smaller stuff that's hurting. So I think developers have no choice. I think they can't launch now. Even if they're bringing down prices to, like, let's say 20% higher than the resale market, it's like, if you guys were a condo investor and you were going to enter back into the market at a time when not a lot of people are doing it, you got to be careful. Like, the chance of a project just being canceled or not getting to 70% selling out, that it won't be like, you can only like in my market, there's probably maybe a handful, maybe 5 developers that I would say, like, if they launch a building, it's being built. So I think that's something that consumers have to think about as well. But to answer the question, they're going to have to wait. We can never just have a nice market in Toronto and Vancouver. We always have to have extremes. Me and Steve joke about, like, in 2021, we stole future sales for the next few years because so many happened in one year. I think pre-construction sold future sales for the next 5 years. Like, I think that's what happened. So if you average it out and look at it from a bird's eye view, once more time has passed, and go, that 10 years, how much was built? How many things sold? It probably looks all right, but it's like spike here, drop here, spike here, drop here. So yeah, I mean, looking into the future, if I had a long-term perspective on condos, I mean, there's legitimately nothing that's currently sold that will be built in 2028, 2029 in the city of Toronto that will be delivered other than purpose-built rentals. And I think consumers can take with that information what you want and try to make an educated decision. Like, at some point here, things have to flip. How long will it take is the big question.
We're seeing very similar landscape here in the pre-sale world. It is slow. It is slow. And similar to the colleague you spoke with today, I've got a very close friend who works at Altus Group. And so we're being fed the data of what's happening in the pre-sale market. And some areas are just grim at best. Like, they're just not moving anything. There's a couple pockets that are still kind of alive, but overall, developers are looking at this data and being like, we can't touch this, right? There's no absorption right now. You can't go to market, hit your sales targets, and be able to move forward with construction. It's just not viable. And interestingly, like, historically, when a project went to market and they wouldn't see the sales absorption that was required, they sometimes had that fail safe where they could switch that project into purpose-built rentals,
right,
and kind of save the day, still go forward, still make a couple bucks. But now we've got a record amount of purpose-built rentals completing in BC. And I think Toronto is about to deal or face that same sort of landscape. And so even the rental built market has to be on hold too. So, we've got right now the resale market sitting around 13,500 listings. Okay. The pre-sale market, the shadow listings as they can be called, it's almost the same amount of inventory. They're about 12,500. We have like almost double the inventory if you put both markets together. It's a big number, and understandably, in a big inventory environment, prices typically go down. So that's the snapshot of today. And yeah, just to kind of wrap up the question is, like, you've been in this industry for a dozen years and obviously are forward thinking in your business. So does this landscape today create future potential? Like, are there, where does your mind go? Like, where are the opportunities in 2, 3, 4 years from now?
I invested in condos for a while. I do not own a condo now. I've sold off all my condos. So I'll give you my personal opinion on it, and then maybe what I'm seeing in the market. Now that was a decision that was different from just like economics. It was like what made sense for my family. Where am I in my life? But we've just spent the last 15 minutes talking about the fact that condo projects aren't launching. The only thing that is coming to the market is purpose-built rentals. There is that missing middle housing, which we can get into more detail on, which I know you guys are very involved in, which we need. But even if we build it fast, it's like, how fast can we actually build it for it to start, making a real difference? And then my own business. Yeah, right. And who are the big boys going to come start building that stuff too now? And then in the market, what I'm seeing right now, it's like, what property type actually has demand, and is that a case of just now, or will that continue into the future? So for me, looking at least next 5-year projections, the type of property everybody wants in Toronto is a freehold home between $800 and $1.3 million. And that exists in different parts of the city, depending on, where you look. What are we not building any more of? Exactly that type of property. Like literally zero. There'll be some infill houses where people build a custom home for themselves, but that won't make any real difference. So I actually believe that the resale market for freehold properties is going to do really well because we're not building it. So that's where I would see opportunity. So I took all the money that I had built up in condos in good years, where that wasn't because my intelligence, it's because the market was nice to me. And I've taken that and put it into freehold properties, or started paying down my own mortgage just for a peace of mind thing. That's not, you can make the argument on like, I should have invested because it's better than my interest rate, but in between the ears, I like it, so that's where I see that opportunity. And then if it's not just a financial opportunity, but a lifestyle opportunity. Yeah. I mean, I think first-time home buyers that were on the sidelines for the last 5 years that had no shot, I think they got a shot now. I think they'd be surprised at, someone I just spoke to about this. They had said, like, I'm buying this condo now for me to own, but really it's going to be for my kids in the future. So like, that's why I'm buying it now. I just want to have it paid off. And she had no idea about the new 30-year amortization. And I said, this option exists and you'd be approved for a little bit more, but your interest would be higher. She's like, yeah, but monthly payment is the most important to me right now. So it's affordability. There's financial opportunities, and then there's lifestyle opportunities, which I think all three of us are like numbers people. So we go to the financial opportunities in our head, but what's going to move the market maybe in the next little bit is going to be people just at a point of their life where they want to do something, and now they have a chance to do it, where before it was so competitive or so out of reach.
So kind of safe to say, and I kind of mentioned this on, I don't know, a couple of weeks ago, but the idea of, and it was quite historical, where you would find, people who had owned a home for 10, 15, 20 years, and they had a kid, and then they would buy that kid or an investment condo for themselves, and then they would go long on that investment condo. So at some point in time, if they sold it, they would have a down payment or something for their kid. But right now, that scenario but people are looking for other scenarios. They don't believe in that anymore. At least the conversations that I've been having. And we're starting to see, I mean, obviously the multiplex program out here in BC is really changing the landscape and giving people other options and different ways to invest. And I think you're going to start to see things like real estate funds and opportunities, instead of actually buying the condo, placing an investment with a developer in a space like that missing middle where they can take advantage of it. I think you're going to start to see more evolution of that, as well as instead of the actual asset holding itself, which I think is interesting. And I think we need to see a little bit more of that.
Completely agree. I think that's where it's going, actually.
Yeah. I mean, when you look at like the overall cost, the affordability of trying to buy a condo as an investment, I mean, when you need $600,000, right? And the average person is, the average household income in Vancouver is $88,000 between two people. The idea of buying an investment on top of somewhere where you're already living is very difficult. And so the idea of maybe putting $100,000 in or $50,000 in, and letting that compound in the development space or in the fund space allows a different kind of opportunity. And I think that's where we'll see more growth too.
Well, I mean, if you're going to invest in real estate, I would assume that we're all on the same page here, that you'd like one of cash flow or appreciation, right? Like one of those would be nice to have.
That's right.
So right now, neither of them exist for condos.
That's
so
right.
It's like, will they come back? Probably. Can you manufacture cash flow by putting 50% down? Yes, you can, but that is a large sum of money that you could argue could be better spent somewhere else, right?
That's a low yield in many instances. If you're putting 300 grand down on a $600,000 property and you're going to make $2,500 a month on it, I think that's a pretty poor investment unless there's great opportunity for appreciation on the other side, which we're not seeing right now. Right.
Agreed.
So the interesting, like the freehold homes, I think, as you call them, is sort of like what the townhome, the half duplex that we have here. And there's no doubt that they are basically the most sought after home type here as well. Ryan and I live in Mount Pleasant, and you look at the stats, and that type of home is currently trading at an all-time high. Whereas the condos and detached in our exact neighborhood are off of peak pricing. The multiplex plan, of course, has helped try to solve this quote unquote missing middle problem. And, between Vancouver and Burnaby, there's upwards of 1,000 building permits in place right now for people that are trying to bring these types of homes to market. On the west side of Vancouver, even though it is the missing middle and it's sought after, a half duplex a year ago would hit the market at 2.3, 2.4, and now they're upwards of 2.9 to 3 million bucks. So not exactly creating affordable homes, but just more desirable homes for those who can afford them. But what I'd love to know is, the province literally had to take the government and force legislation across the entire province to try and help people build more housing. And of course, the missing middle, right? By rezoning all of our land from single family to 4, 5, 6 properties. Saves time, saves money, allows builders to build. Is Ontario, or even specifically Toronto, doing something similar, or is it in the works? What do you think is going to happen there?
Yeah, for 4 units is where we're at right now. What I've started to see, there are some people that are taking advantage of the new zoning in Toronto for this. But they're mostly saying to people that own homes, like, hey guys, now that we've changed this is up to you to now figure this out and go do it. So the homeowner, I haven't really seen a whole lot of movement. They're like, yeah, but I use my basement, like I need it for my kids. So you're mostly seeing, it's like the people that are doing this have to already have the lot, or they're going to actively try to find it. What I have seen, I can tell you in my own neighborhood, I park in an alleyway behind my house. There are laneway houses all the way up and down being built rapidly over the last few years. So that's kind of, I think we're behind in Toronto. We're just kind of figuring out the laneway house side of things, where I think you guys were there a lot ahead of us. And I think we'll probably be a few years behind on what you guys are doing with that missing middle housing. Although we know we need it, it's certainly, there's not as much conversation happening here about it as I know there is happening in your neck of the woods.
And I think you guys have more of that row home option too in Toronto, which is, it's not something that we see a ton of out here in Vancouver. But maybe this is a good time to switch gears here, because I'd love to sort of get into how maybe what's on all of Canadians' minds right now with respect to our friends down in the South and the looming tariff threats that we have that are kind of swirling around everybody's head right now. And I can tell you, it's about the second topic out of everybody's mouth here when we're looking at property, right? The first one is whether or not the property is available. And then the second one is, but what about this, right? And so for me, and I'll mention some of the objections too, which I find quite interesting. A lot of people are saying, well, I want to wait at least a month until I find out what's going on. And I keep, telling people, well, he's going to be there for the next 3.5 years. So right. I don't know what the next month is going to achieve, other than, we're probably going to get slapped with tariffs. So, I'd love to hear from your perspective. What are you hearing on the ground? What are you seeing with respect to tariffs? And is it impeding business? Has it changed your business? What's the sentiment?
It's created a lot of questions that I wish I had better answers to, but the news cycle happens so fast that it's actually really hard. Like, how can you give an educated answer to someone based on the fact that every 30 minutes there are tariffs and then there's not tariffs, and then Yes, there are. Wait, no, they're not. No, it's just that they're not doing the counter tariffs now. They're still doing the original ones. Like, there's just like so much happening that it's hard. And I can only give people advice on what I know in the now. And I can give you an example. Like, we have a really, really nice home coming out for sale in April in a prime park market of the city, like a pocket that everyone wants to live. And we've got a client that's, she's retired and she just watches the news all day and calls me, like, I'm not even joking, every day. Should we list now? I don't want to wait till April. Should we list now? The tariffs. I'm like, okay, take a breath. If you had a junior 1-bed condo, I'd say put it on the market. It doesn't matter. Let's just try to move this thing because it's going to be tough regardless. Yep. You have a home in an area that people want, tariffs or not, someone exists to buy your property. So like, that's my advice to you is like, let's regroup in a month and see where things are at. But it's been tough because I'm not going to, sit here and say that I have the answers for how this is going to impact things. I think if 25% tariffs come in across the board, it will really negatively impact sales volume, which is already low. It should push down prices on the resale market today if people start actively losing jobs. And then as Dan talked about in our podcast, like it will then make the cost of construction even higher. So then in the future, we have another housing crunch because we can never have a nice soft market here. So that would be my response. Like, it's tough to give an answer on it because I don't know.
Not only that, too, tariffs are inherently inflationary too. And so, if you're going to increase the cost all around on goods going back and forth across the border, well, and you're, like you said, the first thing that's going to happen is companies will protect themselves. So they'll lay off workers and then that'll slow down GDP, right? Overall production for an economy will be sluggish. At which point then, if we're still importing goods from the US, it's all going to become more and more expensive to buy the same things that we are buying today for less money. And as a result, the prices just go up. I think there's this misconception in the tariff world that like, oh, well, if you tariff import goods, then the stuff that's already here is going to be cheaper. But through price discovery, what happens is the companies down here just move their prices up. Right. So instead of actually buying the more affordable product, those companies go, well, let's raise our prices because they can't get it cheaper. And then
there's more demand on that product now because people are trying to buy that one instead of the alternative, right?
That's right. And so you end up now with higher prices for everybody, right? And lower value in your money. So
could you imagine if the Bank of Canada has to do an emergency rate cut like they did in the pandemic? It's just like, do we really have to do this again?
I really hope not. Like, I don't want to go through that again.
Like we've just been through this. We saw how it played out. Let's not do this again.
Well, that's a perfect segue into my next question. And, Tom, we'll be conscious of your time and ask maybe one more question each. Yeah. When it comes to rate cuts, obviously there are upwards of 50 to 60% of mortgages renewing in the next 2 years at, as of today is unquestionably going to be at a higher rate, meaning a higher payment. I think Ontario is kind of the front lines here. They're kind of getting the brunt of the condo market. If tariffs happen, they're going to get the brunt of the probably job layoffs and industry impacts. But what's your take for your region when it comes to mortgage renewals? How much impact is it going to have?
Yeah, I mean, it will have an impact. That's clear. There's actually a really good report that just came out from Royal LePage on this that kind of validated what all of us were thinking. And, the headlines were 57% of Canadians will have a higher payment on renewal. And initially I was like, oh, that's actually not as high as maybe I thought it was going to be. 40% would have similar or lower payments. And then the other percentage just refused to give an answer on a survey, which I find kind of hilarious. But those were the headlines. But if you broke down the people that had the increased payments, they said that of the 57% that were going to have a higher payment, 81% of them said it would make a difference in their life. Like it would impact them. But then of that, 22% of people said it would significantly impact them. So yeah, I mean, higher rates means that life is going to cost more, but your property didn't become any better. And Dan, you brought this up on our show, which I never even thought about. It makes total sense. Like, also they had asked what percentage of people that are renewing rates, what did you have? What product did you have? It was basically 75% fixed and 25% variable. So the variable rate people are probably just going to keep riding it at this point. They've made it this far. They're going to continue to ride it before maybe locking in the future if something happens with tariffs. But I'm finding it more like in my actual business. How am I seeing this impacting things? Like I had a friend message me last night that said, like, I'm sure you're getting this message a lot. My mortgage is up in February of 2026. Should I sell my condo now?
Mm-hmm.
So how I'm seeing it impact me on the ground level is people are looking at that date and going like, okay, I know this is coming. It's not as bad as it maybe would have been if I had to renew last year, but maybe I'll just sell. So that could bring more inventory to the market in a sector of the market that perhaps does not need more inventory right now.
Cool. Well, I'll wrap it up on this last one here, Tom, and it's a short 2-part question. What scares you about the Toronto market, the overall real estate market in Toronto right now? And conversely, what excites you about it too?
What scares me is that there is a percentage of people that are not speculators that just saved up to try to buy a property. And I can give you real examples. The resale condo market in 2021 was insane. Multiple offers on everything. And we had clients that said, I don't want to deal. I've lost on 6 in a row now. I don't want to be the crazy one that overpays for this. Because of this, I'm actually going to go buy pre-construction because at least I can get one. And I don't care if it's $1,200, $1,300 a square foot because I'm done playing this stupid game over here. And then they bought that and now they're about to close on that and it's not worth what they paid. So that actually scares me because it's like they didn't do anything wrong. They weren't out there trying to screw people. They got stuck in this. So that kind of upsets me because they're not the, I don't know, no one's a bad actor, right? Necessarily in what's happened here. You can point fingers anywhere you want, but that makes me a little bit sad, I guess. And then what excites me is just the city. Like, I know that sounds like a generic answer, but Toronto's got a million things going on. Why it's so fun to live here is because no offense to Vancouver, but our restaurants are open after 8 p.m. And
what?
And so what actually excites me is like there's so much growth happening. You can be cynical about things. You know, we both live in great cities in Canada. There's a reason why both of our markets are so expensive because people actually want to live here. But if it's a real estate side of thing, what excites me is probably what excites you guys is like, what does the next 5 years look like? Because it's not going to be what it was before. There's no new condos being built. People are going to try to build the missing middle housing. They're going to need more laneway housing. Like that's what excites me now. There's going to be opportunities that didn't exist because of new government policies that may actually make a dent in things.
Maybe even a
Perfect.
new
Tom,
government
thank you
too.
so much for joining us today. This has been incredibly insightful, and it's always so great to kind of look behind that curtain and see what's really happening, you know, in a different region. For those who want to learn more about you or they want to reach out and buy, sell, and invest with clearly Toronto's best agent, how do they find you?
You can send me an email, just tom@storyteam.ca, and story is spelled EY, like stories of a building. And
You were born
also
into
my
it.
real name, by the way. I didn't change it.
Fantastic. Well, thank you again so much. And for everybody who tuned in, thank you as always for watching. Have a wonderful weekend, and we will see you here next week. Bye.